We officially are in a bear market. Many people stopped trading. They lost so much money that it hurts so much psychologically that they want to distance themselves so much from the market, and some people never come back. But the bear market creates tremendous wealth. Welcome to a new video, or welcome to the bear market of 2022. Yes, so what happened last week, and happy Monday to you guys. I hope it's not that red yet. Let's see how this week goes, but we officially are in a bear market. Some people try to deny, and we will come to that, but something for me that, was the aha moment was actually last Monday. Last Monday, we opened up and went very, very low in the S&P 500, okay? We dropped until 4,229, where this number, considering where we come from, 4,800 was ridiculous, right? That's like more than 10% in almost 1 month. In just 1 month, usually, the month of January is not that bad of a month, but this was the worst month ever recorded on the stock market exchange. This is crazy. And this was like a wake-up call, because then afterwards we recovered, obviously, since the low. We recovered quite 4.61%, but it showed us where the market can go within 1 day only, okay? The S&P was down 4%, guys, all right? And this gave me the opportunity to say, okay, I think we need to rethink this everything, okay? We need to rethink how we run the markets right now. Because think about it, usually what is happening is when there's for a very long time a bull market, and basically the bull market is there since the financial crisis. We had a little bit of a crash during the health crisis, a little bit of a crash during 2018, and every now and then, but we never had this, really, bad timings on the stock market, and this could change. I did a lot of research, okay? A lot of things considering, bear market and downturns of the markets are connected with the VIX. The VIX is the volatility index. It shows us as this index goes higher, as lower the stocks are going, okay? So you can see here that considering the VIX, we are in a quite very high area right now, above 30. The last time we was at this area was November area, okay? And this is actually when the overall downturn and the change of market happened, okay? So here, for example, you can see the very first jump in the VIX here in November was on 9th of November. This is like officially now looking backward, the beginning of the bear market, because look at that. Now we're going into the Russell 2000, which is, look at that, perfect timing here on the 8th or 9th of November. We started with the Russell 2000 sell-off. Since then we lost 20%. And usually every bear market starts the same. Okay, we are having a sell-off. We spike in volatility. With the spike in volatility, we are getting the overall scenario of sell-off in the small cap indexes like Russell 2000, very high valuation speculative assets like, for example, this meme coins, and then shit coins, obviously, then Bitcoin at some point, and so forth. And guess what? Also with Bitcoin, we had the all-time high in November. So we are officially in this section of the market, and I want to show you, before we diving into where we are and how people behave and so on, let me show you something what Warren Buffett, one of the greatest investors, says about the financial crisis of 2008.
I want to just go back to 2008 for a moment and just even start with a very big picture sense of it all. What do you think happened that led to 2008?
Well, I think the main thing, but there's all kinds of tributaries feeding into the big Missouri River on this, but you had people think that housing could do nothing but go up, and you had a $20 trillion market in residential housing. So it was a big asset class, and people started using it as a currency, basically, and they found out that it wasn't straight up, in the end, and they borrowed on them, and there were levels of participation up and down the line. I mean, people at the top were writing mortgages that they knew they'd never have to hold, so they'd sell them to somebody in Norway after they'd been put in a package. And you had people refinancing, figuring that it didn't make any difference whether the monthly payments were too high, and you had them lying on loans, and you had the lenders participating in it. And you basically just had a huge speculation in housing, and 50 million of the 75 million owner-occupied homes in the United States were mortgaged. 25 million were free and clear, so they were okay. But you literally had a crash in the value of something that 50 million families owned on margin, had thought were going to go up. They based their living standards on it. In many cases, they borrowed against it, and it was unlike any widespread financial participation anybody had ever seen. So it manifested itself in all kinds of ways. I mean, everybody behaved badly, but they believed, and when people start believing something kind of crazy, you get that sort of thing.
It's early 2008. Hedge funds with a lot of subprime mortgages are going under. There were a couple. At that point, how worried were you? Do you remember being worried?
Well, I wasn't worried because I've always assumed that in a lifetime of participating in the American economy, it's going to move forward dramatically over time, and also it's going to have a lot of hiccups. And it's part of our economic system that we will periodically have some craziness go on. And so I don't try to predict markets, or I don't try to predict business. I just try to adapt to what comes along. I did see in the summer of 2008, I got a call from one of the top officials of one of the main Wall Street firms trying to sell us many billions of dollars worth of equity securities in Freddie Mac, and I knew something was wrong.
It sounds familiar, doesn't it? Yeah. So it's a part of our economic cycle, like he said. I want to show you a kind of a cycle curve that he actually mentioned, but it's basically an early bull where technology stocks goes higher, where you have the market bottom. We have seen that at around March 2020 as well, even when the period of, crashing down was quite fast. Then we had the bull market sectors, where materials, energy, telecom, industrials, all of this goes higher and to market tops as well. Then we have the market peak, and then we have the bear market. And usually people go into gold, for example, right? They go rather into more stable return assets like bond or bond indexes and this kind of things. Here you see also utilities, healthcare, some like basic things to live with, right? And this is basically the overall scenario of the circles of economy. But there's more, okay? There's another graphic that you can see. When a bull market is happening, you have different kind of stages or stations where the people are in, okay? So here you have the accumulation, smart money is buying, right? In the beginning, trend emerges, higher highs, lower lows, momentum building, optimism after a bear trap, FOMO, people of fear of missing out, and then we have the euphoria. Euphoria is something that I described the last couple of months. It was like, just thinking Tesla goes to 2000 with one round, this cult stocks, while I never would short Tesla. Then you have, new markets and small bubbles evolve, like NFTs. Like, there's no way that NFTs will hold and expand their value over time. It's like now it's super hot, like it was hot with Bitcoin and so on, and we will see a cool down everywhere, okay, in many equity classes. And after this euphoria comes usually the down period, okay? And there's also a different kind of psychological factors of the downturn, okay? There's, for example, in the beginning, you have like this overconfidence, right? The herd continues to increase the positions despite the high valuations, or in short, buy the dip, right? Because it always worked to buy the dip. We just saw the bear trap, it worked, right? It will work this time as well. Then you get a little bit of anxiety, which I think we are somewhere in between. We are between the overconfidence, because now we have an oversold situation, and also anxiety mixing up together somewhere there. Then we have denial. Investors ignore the warning signs as the market demand weakens, and I think this is to come. Then we will get the panic. And then we have the capitulation. Capitulation is basically the herd accepts its losses and completely exits the markets. Many people stop trading. Many people stop investing. They lost so much money that it hurts so much psychologically that they want to distance themselves so much from the market and anything. And some people never come back. This is important, guys. Some people never come back. Some crypto investors never will come back. Some NFT investors never will come back. Some meme stocks, spec investors never will come back, guys. Okay, they get so burned psychologically that they will never come back, which is, unfortunately, because it's great after 2020 to have so many new people coming into the investment space and having all of these new vehicles to expand our financial horizon. And then you have this crazy, washout, but this is how things works, okay? But the bear market, and this is maybe the most important quote here in this video, create tremendous wealth, okay? Because those people that can see this early, and if you're seeing this video right now, you are early, okay? So you need to decide now, okay, what is the smartest thing to do? Timing the market is very hard, because maybe you are right to time the market by going out. You never time the market right to get back in. Either you do it on the short term, which again, timing the market, I would not recommend to go out and go in with a small period of time, like a couple of months, and you wait for the, capitulation, or you just use this downturn to push more money into your portfolio to buy those dips and to buy every big company that you see huge value in, and just decrease your average price, which is fantastic, right? And here you can see the volatility that I mentioned in the very beginning, right? You see that the volatility is spiking. 2019, which is this gentleman here, and 2020, you had also tremendous VIX. VIX is such a fantastic way to show you where you can expect more downturn, more upturn, more bullish sentiment, more bearish sentiment, and so on. But currently with the VIX, I think that it's something to very watch closely to understand where we can go next. So I think this is a pretty much nice, very easy to understand situation. Okay, hopefully after this video, this is, some of my research that I put together over the weekend. I always try to educate myself. I think this is the best investment that you can do, to invest yourself in books, in videos, watch podcasts, how bubbles are created, how bear markets work, how people made money in bear markets, and so on. There's great things out there, and I hope you enjoyed. And as always, never smash the like button on this channel, and don't subscribe, guys. Thank you for watching, and see you hopefully with a better week next week. But again, I still believe we keep on with this bear market, so watch out, don't get burned, don't get washed out.